In April, Dr. Michael Burry, the hedge fund investor who made millions shorting subprime mortgages during the 2008 crisis and was dramatized by Christian Bale in The Big Short, made a bold play at the depths of the coronavirus pandemic. Burry's hedge fund Cyan Asset Management disclosed it bought 5.3% of ailing video game retailer GameStop GME at between $2 and $4 a share, spending about $15 million in total. Burry's play was to urge GameStop to use its cash and buy back its stock, potentially retiring about half of its shares outstanding. In a sharply worded letter to GameStop's board of directors, Burry called for the company to exhaust a $300 million buyback authorization repurchasing stock. At the time of his letter, GameStop's entire market cap was just $300 million. Burry's play helped set off one of the wackiest and most out-of-control trades in financial history, which has minted billions of dollars in paper profits for some investors, predominantly amateur speculators, and caused what may be billions in losses for some of the world's most sophisticated hedge funds. GameStop has risen from a low of $2.57 a share when Burry was building his position this spring, to over $240 in after-hours trading as a band of amateur speculators have used social media app Reddit to corner GameStop's heavily shorted stock. The ensuing surge in GameStop's shares has created a squeeze reminiscent of Volkswagen's 2008 surge to a $500 billion market cap during the depths of the 2008 crisis, which led to about $30 billion in realized hedge fund losses. At the urging of investors like Burry, GameStop bought back about $200 million in stock through the course of 2020, dramatically lowering its shares outstanding by over 30%. The repurchase, combined with massive hedge fund bets against GameStop as it suffers from declining in-store video game sales and a brick-and-mortar malaise, meant it ended 2020 as one of the world's most shorted stocks. Enter Reddit thread @Wall Street Bets, where for months posters have been trying to squeeze out GameStop bears and pump the company's stock. As GameStop picked up momentum due to the addition of Chewy CHWY founder Ryan Cohen as an investor, and surging sales of PlayStations, Redditors began to smell blood in the water. A social media organized squeeze has taken place in January, which has fueled a 881% gain in GameStop shares over the past month. The battle royale is reminiscent of a similar showdown about 15 years ago, albeit one between professional traders, instead of total amateurs taking on a giant fund. Just before the financial crisis, billionaire John Arnold squared off against Brian Hunter of hedge fund Amaranth on a calendar trade, long March, short April, in natural gas futures. The duel made Arnold a fortune, but cost Amaranth $6 billion and caused the fund's demise, which